Welcome back to Face, Steve.
Hey,
How are you?
thanks. Good, good. Good to be back. How are you doing?
Good to have you.
Yeah.
So, why don't we just, get you going and, um, you could share your screen and we could talk about what you've been seeing in the markets. I'm trying to,
Okay.
so,
Well,
uh,
do you have any specific area you'd like to start?
yeah, let's start with equities. I've been watching your excellent YouTube videos too. So besides interviewing you, I go and check, some of the stuff I'm doing. I always see on the right-hand side with your presentations. And as of late, you've been looking for some sloppiness or at least a minor correction in equities. And, being perfectly on time is tough when you're top picking, but you still have conviction that we're in the zone. And
Hmm?
it's just a matter of how deep it's going to be. So your cycle work is really some of the best stuff I've seen. So
Appreciate that. Really do.
yeah,
Can you see my S&P charts up there right now?
they are there.
Good. Okay. So, for those people that are new, I'm a cycle analyst, really one of the pioneers in it. We look at being able to project in both price and time, which is
Do you
something
remember
rare.
Walter Bressert?
Yeah, I know him. I knew him, and
Okay,
I knew his son also. So I did
I-
know
is
them.
that
Yes.
is that where you kind of picked up your interest? He was really kind of a pioneer. I mean, it goes back to actually when I was young, and
Yeah.
that was
Well, it's
quite a while ago.
I've been a student of market cycles for about the last 48 years. I've been a trader for
Okay,
50 years since I was a member of the CBOE starting in 1974. And
okay,
when I was in high school, I was in a rock band, and my drummer, the band broke up. He moved to California, and I went to visit him in 1975, and he handed me a book, Profit Magic of Stock Transaction Timing, which was written by J.M. Hurst, and he is the guy,
oh,
he is the grandfather of cycle analysis. And
okay,
so I read that book and began to study the work, and then the work that you're seeing right now on the screen is really has evolved from what J.M. Hurst put out. It's different than most other psychoanalysts
yeah,
in some ways, but really, sticks with the overall premises
yeah,
of the fact that there are normal ebb and flows in the markets of money flow, really. So what we do is really look at the money flows. On the bottom are cycle brackets. It's a drawing tool that just gives you the sense of the normal rhythms that are in the market or the heartbeats. And then the actual trading turns out different. And when you look at the actual trading in the market, it then gives you important messages. In this case, this is the whole bull market you're looking right here on the weekly chart. Going back to the October lows, which the cyclical patterns nailed, and you can see how the actual trading was in here uh, versus what the trading would be if it were the ideal on the bottom. And when it peaks more on the right side, it's called the right hand translation, and that gives you this upward trend where you have the higher troughs, as you could see. And as you could see, these yellow areas are periods of risk, and that is when you get minor cycle outflows and dominant cycle outflows is when you get the biggest corrections. And when you're in a bull market, they're just going to correct into support areas. This one was 10.9% back into last October. And that's, pretty normal when you have corrections of, 8 to 15%. And there's one due right now in the market right here. Our projection for the year for the stock market, when I did my year-end projection in January, was that the market would trade up to about 5,100 in an extension of the bull market. And I thought that would come second half of the year. This actually was stronger
yeah,
than our bullish projections that we had. This right over here, this line is our reversal scout. It's proprietary momentum indicator. And when it turns up, it confirms the bottom. And you can see it's been in this upward bullish mode the whole way. And that has told us, along with the shorter term patterns, that the market was still bullish. We have not turned bearish yet, even though the market has gone past our upside objectives because we're market agnostic, really. We just let the markets tell us. This has still been positive. I'm going to switch over to the daily chart here, and you can see in here these same cycle patterns where it keeps trading up. And just looking at the short term over here, you get these sell signals right over here on the candlesticks that are highlighted in red. And that gives us a warning that this has basically, in a topping area and likely to get a minor pullback. But you could see it's still pointing to just coming down to support. And then very likely what will happen is that this, whoops, I want to just be able to duplicate this and you get an idea that the next cycle will then be pointing up here again for another rally while it's making the peak on the weekly chart. So this is all bullish. This is the slim ribbon, which is bullish, still an upward giving support to the market. This is the slim ribbon PO on the bottom. And what that gives you is the upward momentum resumption signals with those upside arrows when it's green. So this is all bullish. And, even though it's extended, even though we're trading at 188% of market cap to GDP, all of those things are super extended, super ridiculous, if you ask me, and a good reason to expect a pretty good sizable correction. Until the market tells you that it's ready to correct, it's not. So overall, we've been positive, and this is still in those positive formations. Money has not begun to flow out.
Okay, so I see on the chart on the left-hand side a cycle trough in May. And when I see that, I think of your darker blue one. Looks like
this
May.
one up here. Let me just blow that up right over here so you could see. So this is
and
the
you know what that would play into, Steve, is say the market's correcting into May, and you're going to start to hear people chanting sell in May and go away right when we're reaching the trough of the correction and get shorts loaded up in there for the next advance.
Yeah, well, the probability of the market falling past the May period is extremely small.
Yeah.
The probability, you see this period of risk March through May.
Yeah.
That red right over there. So sometime in March, we're expecting a peaking to occur. But generally, the downside, the biggest accelerations are very much at the end of the cycle period where there's a capitulation. You could see right over here, final couple of weeks right over here, final 3 weeks right over here, final month right over here. So sometime in, April, May is when the acceleration could come to the downside. It will likely be brief. It will likely stay in this construct of a bullish market.
Okay. Nice.
Yeah, thank you. What would you like to see next?
Well, just like my compadre Ryan said, last time you were on, you were bullish gold and loaded up on miners. That may have been premature because miners did sell off for a while, but you're being definitely vindicated now. And I caught your recent gold video, and I think you actually showed a chart, a logarithmic chart by Tavi Costa.
Yes.
Correct?
Yes.
And that is really mind-blowing.
Yes, that one points up to 910,000 based on the log scale.
Yeah.
Yeah. So this, again, is the cycle analysis on the gold markets right over here. On the left is the weekly. On the right is the daily. I'm going to blow up the weekly right over here. And you could see that this cycle right over here, the minor one, actually, that low came just a little bit off. It kind of messed me up a little bit. It really shouldn't have. But then once it breaks out of the triangle, I know we're in the resumption on the minor cycle on the bottom right over here. Moving up to projections. My projection for the year was minimum 2,200, which we've seen, and probably 2,300, which you could see this is pointing up to right over here. But then it really is pointing to much higher levels in here. 2,500, 2,600, I think is fairly likely in this year, and maybe even much higher than that over the next coming years. I'm going to bring in a monthly chart right over here for you to see. And the monthly chart right over here points up to that areas up there, which is in the 3000s potentially. See this big monthly gold cycle right over here. I mean, that goes way, way out into 26, 27. 2026, 2027. And this extension is at 2335. I think that's highly likely this year, with potentially to this level up here, 2517. This is super bullish. Now, you could see over here, there's a minor cycle that probably corrects sometime into the summer. And then this next rising phase right over here could easily be much stronger up there than I have the minor phase drawn. It likely would get up into this area well past the 2335, up to that 2600 area right there. When I look at I'm gonna go back now to the weekly chart because we're looking more current time. It really makes a lot of sense to me that we're going to get to that 2300, 2335 area in really the next few months in here without a lot of problem. You could see the cyclical patterns are beautiful in here, and they really speak to the fact that these prices were set up to rise. We went through this very, very long-term consolidation that you can see that was lasted from really out over here in 2020 out to this year. And that's over with. The consolidation is over with. This is like what that Tavi Costa analysis was, though I don't use log scale because it doesn't work well on cycle analysis. And here's the daily chart right over here. And you could see this is a just super positive pattern that we see in here. And you see those yellow corrective zones? And this is that one we're talking about here that comes out into April potentially. And then this rally period over here, mid-April through May, could give you that pop easily up over 2300. Now, I heard you guys talking about the dollar before, and, there's a great inverse correlation between the dollar and the gold market. Now, that's not 100% correlation. There are times they do move together. I've shown videos on that. But look at this pattern in here in the dollar index. If the dollar goes down, it takes more dollars to buy gold. It takes more dollars to buy everything. I mean, it's just as simple as that. So in this case, the dollar patterns are spectacular. And you could see, if you look at this minor cycle right in here, it's almost a perfect formation in here. The fact that it tagged the 78.6% says it will rally to the sell zones. You could see exactly what it did in there. You could see the momentum turns up here on the minor cycle. The momentum turns down here on the minor cycle. It says both of these cycles are bringing money outflows from the dollar. That would be, of course, inflows to the euro, inflows to the Japanese yen. That is all happening. Those are all bullish patterns that I've been looking for, and that's happening. You see the daily trough here in the end of May. So this comes down. It could easily get the first target over here is about 150. There's a little support at 101.5 on a shorter term, but 101.50 down to potentially 99.50 over there is where I expect the dollar to go in these next couple of months. And were that to happen, it's going to be a lot of stimulus for the gold market, for the metals market. Copper, platinum, silver, all of them have bottomed right now. Here's the short-term pattern that we see here in the dollar. Beautiful patterns that have 1/3 minor cycles and dominant cycles. This decline was expected. Here's your minor resistances, which brought the selling. The slim ribbon PO on the bottom, which is turning red. You could see what happens when it gets up here and then you get those signals. It moves back to the downside. That's probably going to happen out here. We may be getting a little bit of a bottoming in here and then a rally, but this is a sell zone over here in this period out here in April. So remember, I said the dollar moving up gold moving up starting in April. This points to the sell area for the dollar in April, which is a perfect inverse correlation in the cyclical patterns. It says, get ready to, after a bounce here in the dollar into something like the second week of April, get ready to buy euro, get ready to buy yen, get ready to buy gold in those minor dips.
Okay, so there's a big debate in bonds, Steve, and yields, and they've started to trend lower. I'm not looking at my screen. I know the CPI came in a little hot.
Mhm.
Your view on rates?
Rates are going down.
Okay.
Okay, now I'm not, when I say that, I have not been, and I am not real confident that the Fed is going to do any significant rate cutting this year.
The
But
market will do it.
the market will do it. And, I've been looking for maybe two rate cuts this year. It could only be more if the stock market is falling very hard. There's the traditionally, historically, the big declines in rates come as stock market is falling hard. Now, we're not looking for a real long decline in the stock market this year. So, I mean, when I put up TNX on the yields in here, and I'm going to keep the side by side up here for you to see because it's so clear. The market, I mean, they went up to 5% with the Fed not really raising anymore on the 10-year yields, and then they went down to 3.6%, 3.7 with the Fed not ready to cut. The market's been so much more volatile than the Fed, who has just been stable and actually scared to death to make a mistake, which I don't blame them because their credibility is shot based on what they've done
Yeah.
over these couple of decades. So you can see this little downturn in our momentum indicator right over here on the weekly chart. That says that this rally right over here is over in yields, and yields, our projection is to come down to best case 3.9, but really projecting down over here to 3.6 sometime between now and May. Interesting. That aligns with the decline in the stock market, which makes all kinds of sense because if the stock market is actually getting hit, the bond market is going to be pricing in the Fed's action. So that's the period right over here that aligns nicely with the stock market. Now you see this really is turning over in the resistance area. Now we originally had thought that this rally right in here in this rising phase could get higher into the mid to high fours. And then it told us basically that it was not happening. If you look here on the daily chart, you will also see, let me just get the pointer up here, that this has a little bottoming going on right over here. And then likely we're going to get a little bit of an uptick here in yields. I have us
Yeah.
projected up to 4.3. I have some doubts it will get up that high. We'll see where the resistances are once this trough is firm in here.
Yeah.
But then I have a sell pending, a buy treasury futures in this bounce right over here. And so, in other words, this bounce on the daily chart right over here is equivalent to some little bounce here on the weekly chart. And then when you get after this rally over here, then the weekly chart resumes back to the downside, and so does the daily, because the principle of synchronicity says that this will come down more, and the ultimate trough on the weekly will match up with an ultimate trough on the daily. So all of these things are pointing to the fact that you could get a little bounce in yields right over here, but
Okay.
it's likely to move down again and move down sharply. That will
Okay.
be food for the metals.
All right. Any technical perspective on the underperformance of silver compared to gold, and the gold silver ratio trading in the low 90s, has favored gold. Can you see that flipping? Um, and also maybe a comment on, since you believe platinum has bottomed, yesterday I think was a pretty key day for the the gold platinum spread. And most people haven't been around long enough to remember platinum trading at $1,000 premium to gold rather
Yeah,
than a
that's
$1,000 discount.
That's true. So let's just put up the platinum chart and we'll talk about that. That's the question you just asked about the relationship between gold and silver and the fact that it's really lagging is significant in that normally when there's a good rally in those markets, then the beta in silver is much higher
Right.
relative to gold. So, you get that ratio really taking a dive.
Hmm.
That's is maybe just starting, not quite yet. And I actually think that people really haven't caught on yet to what this metals move could be. And there also might be some psychology around the Bitcoin move and gold, and the silver is much silver and platinum, copper. They're much more of industrial metals. They're not an anti-dollar play as much. So
Right.
you might be getting the anti-dollar play like in Bitcoin, going on in gold first. I happen to think that silver is going to catch up and catch up in a big way.
Okay.
Platinum, you can see in here, has bottomed, and on the weekly chart has bottomed also on that minor cycle. So that says that it's likely to come up into the resistance area. That's about 970 right there. If this didn't get down to this 78.6, which is pretty deep correction, I would have this projected much higher, but it might need to do some more work out over here in the summer before it can really get that sizable move. You can see right over here on the daily chart, the resistance here is at about 970. That's this peak of this level right over here. And then over here is that $1,000 level right there, which is a potential for it to get up to in this cycle. I would guess around 970, pull back, and then this next one out over here, get up stronger over there. Let it do some work over here, is what it really looks like. But this is turning positive. You see here the slim ribbon PO has turned green as the slim ribbon is turning
Yeah.
green here. And the reversal scout on the weekly is now turning up. So these are nice signals in here that something good is happening in here. I heard you guys talking about the silver miners. And last time I was on here, I talked about the fact that I was buying them and loading up on them. Believe it or not, I'm still buying. And I believe that once investors have not caught up yet to the fact that I'm just going to put up SILJ while we're talking about that.
Yeah. It
They
just
have
cleaned
not,
out stops under $8 and turned
yeah,
higher.
they have not even caught on to the fact yet that there is a huge, I haven't updated this one yet, as you can see, there is huge amount of leverage in these companies because most of them have pretty low fixed mining costs. And once this price of silver gets up, their earnings just explode. So there's that potential in there. Now you could see this bottom formed in here early on a double bottom. And you're right, there was a capitulation here and a clean out. Now look here, you can see the momentum turning up right over there. I think this is just the beginning. Now, if you get over this 78.6, which is $10 right
Yeah.
over there, then what that's going to do is start to give me a sense that this is a major bottom in here and begin to move up in a way. I've had several people and several sites ask, what is my best play of the year? And it's been SILJ
Okay.
because I think that the leverage condition in here is really could get this to pop. And the longer term numbers out there are, could easily get up into the 12s in here for a 25-30% gain, and maybe even well higher than that, depending on how the silver market does.
Okay.
This is just
Cool.
one of my favorites in there.
All right. You know what people aren't talking about because it's been so disappointing? I'd like your view on WTI if you have it, and we could wrap it with that.
Okay, so you want oil.
Yeah.
Okay. So here's the oil market right over here. And this is interesting because there was in cycle analysis, often there are energetic shifts in the market. We have to watch for that. And the fact that this low over here was above this low keyed us into that. So you see this blue cycle right over there, which has shifted over from where the other low was right over here. That gives this shape something more positive. These cycles in the bottom here are heating oil and gasoline, and you can see that oil is really following heating oil and gasoline. So you're in this rising phase, which is a bear flag forming right in here underneath these resistances or in these resistances. So I'm looking for oil to turn over and get down under 70 out over here in the summertime.
Okay.
But right now, it's just making this what I think is a bear flag being driven by the products, the action in the products right over here.
The
Uh,
charts are pretty similar to the 10-year yield. I've noticed over.
A little bit further out in time. It's not
Yeah.
quite phased properly. I would say it's out of phase with them, but I see what you're
Okay.
saying. Yes.
Yeah. And we have a request for uranium, and I
I do not
promise
have
that'll be it.
uranium. Sorry.
Okay.
I don't do uranium.
So Barry, go get your Geiger counter out, and you come back and report to us. So Steve, another excellent presentation.
Thank
When were
you.
you at the SIBO?
I from 1974 to 1991.
Oh my gosh. Well, you know what? We probably bumped into each other at the Sign of the Trader
Yeah, I'm sure we
one of
did. I was
those
a member of
years.
the Board of Trade and the Merc at the same time. So,
Okay. Yeah,
oh,
I
so
was at the Merc. So
yeah,
I would wander over to your territory and
yeah,
meet my buddies at the Sign of the Trader.
yep.
Sometimes
I
during
probably
market.
saw you there.
Yeah. Anyway, that was we're still in it. I have to say that we are warriors
Yeah,
to so,
absolutely.
to
Here,
survive in
here
this
I am,
business.
74 years old. May will be my 50th anniversary as a trader. So,
Wow.
and I, still feel young and vibrant, and you can see the work that I do. So it keeps me young.
Yeah, yeah. Love of what you do keeps you
Yeah,
young,
right.
and so I recommend people check you out, check out your videos, and Steve. I pay attention to what Steve Miller is looking at and what he's saying. So if I do, maybe you should consider that too.
That's
So
great. Here's my website up there.
yeah.
slim.com. Go check it out. And we have a new day trader service that is mind-boggling as I put some of my most advanced applications into it. So get up there, click that learn button and take advantage of that great special we have going on now.
So two dinosaurs that have not stepped into the tar pit yet. That
Yep,
bring you can't learn experience. You have to
yeah,
live it.
yeah.
And it's always a pleasure and honor to talk to you, Steve. Thank you for your time today.
Sure thing. Glad to be here and see you next time.
All right.
Bye-bye.
Steve Miller, everyone, on X at Ask Slim. And that's going to be a wrap for us today on Turnaround Tuesday. Good hunting. Could join the team in 17 minutes on the morning edge. Don't just count your gold bars and silver coins and shares. Count your blessings. Adios, everyone.
Hey traders, this is Blake Morrow with Forex Analytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.